advantage of it.
Hey, JJ.
What's up, my friend? How are you?
Hey, wonderful. So, buddy, the last YouTube went viral that we had with you. So, YouTube, you helped me launch my YouTube show. So, help me bring it home for the second edition with JJ The CPA. We got a lot of people who have questions on the employee, the ERTC. Tell us what that is, and can I get that for my business?
You most likely could have got it last year, but for this year, for the ERTC, I don't know that you're down because for the Employee Retention Tax Credit in 2021, which under the new American Rescue Plan Act that was put into play here just last week, those that have employees that their revenue is down at least 20% in any quarter in 2021 compared to 2019 similar quarter. You heard that right. Any quarter in 2021 that is down 20% compared to the same quarter in 2019 would qualify for this credit. Now, it's a over-the-moon tax credit. When you hear it, you don't even think it's true, but up to $10,000 of wages per employee per quarter is a 70% tax credit. So whatever you are down in that quarter, so in quarter one, if you're down 20% compared to quarter one of 19, then all the wages that you pay to your employees, up to $10,000 of wages, you get a 70% credit. So Josh, let me be clear on this. If you have a bunch of employees and their total compensation in quarter one is $100,000 to 25 employees, none of which made over $10,000, your tax credit in quarter one is $70,000. The other aspect is if you're getting affected by a government shutdown, an official one that's affecting commerce, travel, or group meetings, and that then resets every quarter. So the potential is a $28,000 per employee tax credit for 2021.
But you have to be down. But you have to be down Q1 2020 relative to Q1 2019. You can't be like, I'm down Q1 2020, but I was up Q1 2020. It can't be like, you can't mix and match, right? It has to be the corresponding quarter.
Yeah, corresponding quarter. So from 21 all the way back to 19. So first quarter 21 to first quarter 19. And I'm glad you said that, Josh, because you're not comparing 21 to 20. You're comparing 21 to 2019. There's a little caveat here that if you're down at least 20% in fourth quarter 2020 compared to fourth quarter 2019, then you also would qualify at least for quarter one of 2021. Now, here's the deal. If you are over 500 employees, then your credit will only be for the employees that didn't provide service and still got paid. But for those that are 500 or less employees, which you know as well as I do, that is a ton of businesses across America, 70% tax credit's not a high hurdle on the 20%, and it includes the health insurance that the employer is paying. So if you don't mind, I just did a seminar on this late last night, and I know you and I were trying to connect. I went until about 10 o'clock at night, 11 o'clock at night Eastern Standard Time, and did a 7.5-hour video or seminar that anybody can get access to by going to my website, jjthecpa.com. Now, anybody can get access to. There's a minor fee to it. But, you know, Josh, the one thing that people need to keep in mind is that this employee retention tax credit reduces down your deduction for wages. So it does have an inverse tax effect, which means that when you get these tax credits, you need to get with your tax advisor, see what the tax effect is. But then here's what they need to do with that, Josh. They need to probably call you. They need to get in line with what should they be doing with those dollars. It's not meant to be money out of the sky. It's to help the businesses not only make payroll, but then in essence, help them plan for the future and do some financial planning. And that's where you come into play, my friend.
Yes, we're with JJ the CPA talking about the ERTC. So let me get this right. So if if you have a small business and you were down Q1 2021 relative to Q1 20, is there any benefit there or not really? It's just Q19.
Just Q19, but it should work in everybody's benefit because obviously 2019 was before the pandemic. So a 21 versus 2019 is what comes into play there. And then the other aspect is, I hate to talk about unemployment because that means that somebody's on it, but they did extend the benefits. $300 a week, of course, should be more, but that's extended through September 6th. The big thing for people to take away from that is that you still need to make sure that you qualify and apply. You may have to tell the unemployment agency. And then I am expecting breaking news anytime. It's not breaking news yet, but I'm hoping by the next time you air next weekend, I know you air also on Sunday, that you will be able to report that the Senate passed and that the PPP has been extended. We're waiting right now. There's a lot of confusion out there because the House did vote to extend it to May 31st, but the Senate needs to, in essence, confirm that. And if it gets extended, here's the biggest news of the century probably for those that are getting PPP or qualifying is the Schedule C filer can get it now based on their gross income. Line 7 is Schedule C. Before it was based on the net. This is a huge difference. And if they extend it, two things should happen. One, those that applied previously should be able to go back and reapply to get it on the gross income versus the net. The second thing is those that got PPP for sure in January will then be eligible to get PPP Draw 2 because there's a 8-week period of wait time in between Draw 1 and Draw 2 from the second round. So people would be able to, in essence, go back to the well, assuming that they need it. So a bunch of big news, especially related to PPP, I think, on the horizon.
Wow, this is fantastic. And we're going to go to the phone lines. We have a question for JJ. Folks, if you have a question for JJ, the financial quarterback, or JJ the CPA, call us right now, 800-321-0710. Next up, we have Jason. Go ahead.
Sure. Hello. So now I have monies funds in my 401k plan. I would like to be able to put down a good portion, probably about 50% of those funds to pay down a large portion for down payment on a home. Looking to see if there's a suggested value in that. Is that something I really would like to reduce my monthly cost and have more money freeing, or should I also push even more to that percentage higher taking out of my 401k plan to pay down more of the house to reduce my monthly cost?
Sure. I really don't see, I don't ever like to take money out of a 401k to pay for a house. You're usually taking it, what state do you live in?
New Jersey.
Do you know what your federal tax bracket is?
Offhand, no.
Okay, so let's say it's 24%. And I want you to look up brackets and see where you are. But let's say it's 24% plus about, 6 to 7% for the state tax. You're pulling out money out of your 401k. Let's say you pull out 200 grand, you're paying 60 grand in taxes just to not have a mortgage payment. I'd rather pay the bank 3 to 4% than the government 30. So that's my answer.
You're going to get taxed at the end of the 401k plan as when you go to pull it out at the end as well. So the difference there being when you retire, getting hit with the tax or taking it now.
Yeah, but then you lose tax deferred compounding. How old are you?
I am 50 years old.
Yeah, so you would lose over 22 years of tax-free compounding just to feel good that you've paid off your mortgage. I understand the impetus of paying off a mortgage. I just think in a world where now we have inflation, it'd be far better to take that money that's prepaying your house. Maybe you refinance the debt to a 30. I'm against ARMs or interest-only mortgages, but I would definitely take that money and save it. I'd rather give the bank 3% than the government 30. So that's my take. What's your take, JJ? Looks like JJ's talking to his YouTube audience. So we're going to take a short break, and when we return, we'll be back with JJ the CPA and Josh Jelinski, the financial quarterback, give us a call now. 888-988-JOSH. 888-988-JOSH. And folks, if you call us now, I will throw in my 27-point ultimate financial game plan. In the 27-point checklist, we'll figure out, are you protected from liabilities? Are you protected from excessive taxation in your 401k, in your IRA? Have you considered Roths, 529s? And as a rare special, we'll throw in JJ The CPA's book, When You Call Us Now, 888-988-JOSH, and request your free, no obligation review, 888-988-JOSH, 888-988-JOSH. We'll be back after these messages.
It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jelinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jelinski.
Josh Jelinski is your guy?
Listen, if you're 10 years or less from retirement,
Which I am.
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jelinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
We're back. This is Josh Jelinski, the financial quarterback. And we're with one of our favorite all-time guests, JJ the CPA, my brother from another mother. We even have the same initials. So we got the ERTC, the PPP, any other acronyms that we need to know about. And I'm going to be selfish. I've met with a lot of people. We're going to be selfish for my good buddy Ernesto, who's helping me produce the show. Ernesto, have you gotten the PPP yet? Not yet.
I haven't gotten it, but you know what I'm going to do? I promise. On Monday, I'm going to my bank, First Constitution, and I'm going to be applying for PPP.
Okay. Let's break it down, JJ. We have a listener who just happens to be a freelancer and producer of the video of the new YouTube show. He's also an Instagram celebrity. He has like 40, 50,000 Instagram followers for his beautiful photography. So if you ever need a master photographer, Ernesto photographs models and beautiful people. You know, the beautiful people, food, and then me. Somehow.
Your photos came out great. I photographed your family.
Yeah, you did make me look better than I actually look in real life. So, Ernesto, so JJ, if you need a beautifier, Ernesto's your guy. So as it relates to Ernesto, I really want to break it down because I've talked to many people. They still have not applied for PPP. They talk to their bank or they talk to their accountant. And by the way, I am livid at accountants. Some accountants listen to this program. They follow you. They are amazing. Some who don't listen to this program are just, they're telling people sometimes the wrong information. Like, oh, you can't do that. It's too late. So you didn't get round one or round two, Ernesto, correct?
Correct.
So what would you do? And you had a worse 2020 than 2019?
For sure.
So let's break it down. Let's give Ernesto some gold right here, JJ. What should he do?
Well, you bet.
Because he's new to me. I mean, he's been a friend for a long time, but January is sort of when he started doing the YouTubes. So I was like, dude, you got to get PPP. Are you down with PPP? Go ahead,
yeah,
JJ.
That's right. You know me. Who's down with PPP? I got to say, though, Josh, I'm loving being on your YouTube show. I did go live. I apologize when you were talking to the prior caller. Went live on my channel, told everybody to come here, even if they didn't catch you live, to subscribe. So for everybody that's listening, get over to Josh Jelinski's YouTube channel and subscribe.
Did you like that one, Blair, real quick, before we get back to Ernesto? I noticed that you actually commented on one of my videos that you liked the raw quality of me in the guest room of the vacation house. Did you see my little son, like he was yanking wires and pulling things?
It's the best.
So you like the raw quality of Billy. It's always the youngest. The older kids, they respect it. He was pulling wire. He really wanted to be on the show. Go ahead, sir.
Yeah. Well, that's the good thing, though. My son and I, my son has interned with me, Cooper, and he's planning on getting an accounting degree, becoming a CPA after he retires from the MLB, of course. But anyways, we do a series on our YouTube channel. You might consider that with the kiddos because you hear their perspective. It's kind of a cute way to get information out there. But Ernesto, the first thing I want you to know is that PPP, as it stands right now, ends March 31st. They may extend it. I expect them to extend it, but you don't want to wait. It's actually very easy to apply. If your amount is under $150,000, are you ready for this? You don't provide any documentation when you apply. Now, you need to make sure you qualify in the sense of meeting the qualifications, obviously. But since you didn't get it before, you qualify for Draw 1, which means you don't have to show that you had a reduction in gross receipts. Basically, you need to indicate that you are being affected by this pandemic financially. So you're going in, and if you're a Schedule C filer, you go to Schedule C, you answer a few of the questions that come off of, and then here's
real quick, do you know if you're a Schedule C filer or not? He may not even know what Schedule C is.
To be honest with you, I don't. I'd have to call my accountant.
You probably are.
So a Schedule C filer, just know this, you don't file a separate return for your business. So if you file a separate return for your business, then you're filing under that business information. But when you're looking at the PPP, for a Schedule C filer now, it's based on your gross income, which is line 7. This is a beautiful thing. It's way larger, obviously, than before, because before it was based on the net. And so in some ways, Ernesto, you waiting until now, even though inadvertently it's going to put you in a much better position. I wouldn't wait. The other aspect is
no, meaning by wait, he really only has now 11 days because he procrastinated to this far.
Right, and many, you don't need to probably even call your bank. Many have a portal online. Go to the website, fill out the information. They can run it through the SBA. And then here's the thing that's unbelievable about it, okay? First of all, it's here to give a hand up to businesses. But are you ready for this? You don't pay it back, okay? You obviously have to use it correctly, but that's easy to do. You either pay your employees, or if you're self-employed, it's just an automatic forgiveness. And are you ready for this? The money that you use from this tax-free money that you don't have to pay back, you actually get to tax deduct it. In this ERTC seminar that I did, I did this inverted benefit. So if somebody were just to get $10,000 of PPP, depending on their tax rate, but if they were at the 37% tax rate, it's actually worth $13,700 to them, because not only did they get $10,000 tax-free, it doesn't reduce deductions, you don't pay it back. Here you go, here's $10,000. The business expenses that is spent on then yields a tax benefit, meaning it reduces down your taxes. So, Ernesto, it is very easy. I mean, you don't even have to call your accountant. If you just have a copy of your 2019 return, which you should have by now, of course, you're just taking that information and you're filling it out. I promise you, couldn't be more than 5 or 10 minutes. So check it out, and then if your bank has issues, they will follow up. So I want to give a quick shout out, if you don't mind, to Carrie and Jacob and Laura. These are great fans of JJ the CPA, and thank you for jumping over here, everybody. Be sure to subscribe. I see that we've got 27 now on 6 thumbs up, so also thumbs up on this. And Josh has, I think, single-handedly in the beginning really helped promote my channel, so help me promote his channel as well. And we've got Greg on with Roll Tide out of Alabama, as well as Jill. So thanks for being
I love Alabama football. I love Alabama football. You know, they're excellent. You know, people love to hate them, but Nick Saban, those teams are well played. Well, we got Mole Own, who says, what if you didn't do your 2019 return? But first, on the YouTube channel, I just found this out. Hour per hour, we get more listeners than just about any financial radio show that I'm aware of in the greatest city in the world, pretty much. I just found out per hour we get more listeners than Dave Ramsey. I was
awesome. Well,
I was shocked by that. So he does a great job telling people to get out of debt. But we're like financial planning 2.0. So Josh just became my favorite CPA. Well, wait, no, I'm not a CPA. Jelinski, that is. And then
Greg.
Yeah, Greg is great. So we love Greg. So what about if you didn't file for 2019? A lot of people still did not file for 2019. What do they do? My recommendation to those people is fire your accountant or fire an accountant or go hire an accountant who will sit with you this week. You could pay him $500, pay him $1,000. Just get the taxes done, because a lot of these benefits are contingent upon getting your taxes done. But you're the expert on it, so I want to throw it to you.
Well, I appreciate that. Yes, your accountant should have been pushing you, but of course it is your responsibility as the taxpayer, which is just more of a push on those that didn't file, get her done.
There you go, JJ, defending the accountants again.
That's right. But with the PPP, there's not a requirement that you have filed your return. It is a requirement, though, that whatever you're going to base your numbers on, it's what you have or will file with the IRS. So if you don't ever file, then you're going to have a little whooping coming. So you need to file. There really, at this point, couldn't be a reason that you haven't. You got your numbers, pull it together. But here's the deal. You can base it on your 2020 as well. But know this, when you're going to apply for the PPP, you do have to indicate that you feel as though you have some financial uncertainty. So we do have a question here from Brother Ted here on your channel. And
Brother Ted.
To know, to be eligible for PPP, you simply need to have a better 19 than 20. None of that comes into play as it relates to first draw. When you're looking at first draw, you don't have any comparison to any other year. When you're doing the second draw, which means that you already got PPP previously, so when you do the second draw, then it does require a comparison of 2020 to 2019, and you do have to have your gross receipts down by 25% in any given quarter. And so at the end of the day, you want to go and check out the PPP if you've never got it before. Farmers, for any farmers listening in, you're able to go and reapply even if you got first draw in 2020 and reapply now based on your gross versus your net. There are many farmers that didn't even get PPP because they show a loss, and before PPP was based on your net. Now for Schedule C, Schedule F filers, it is based on your gross income, not gross receipts, but gross income. And then for S Corps and partnerships and C Corps, it's based on the wages that you pay. For partners, it's based on your self-employed income. You know, many think that the accountant is their source, but there are a lot of accountants out there that really saw it outside their purview. Technically, it doesn't have anything to do with tax. It does include information from a tax return. And so if you're not getting the answers from your accountant, I don't know that you fire them if they're doing you a good job for tax, But at the same
thank
time,
thank you for that, JJ.
From the bank.
Thank you for that clarification. Yeah. I was having fun.
Yeah,
sorry, accountants.
No. I didn't.
Sorry, accountants.
I didn't even say.
No. The other thing too is accountants were really not given the appropriate tools. Financial advisors were not given the tools. That's when I found JJ. And we started doing shows like every week in March and April, and all of a sudden he hit it big time. And so I am Iron Man. He is Captain America, I guess. But Iron Man dies, doesn't he? So I'm gonna.
He doesn't die. He's gonna come back.
He's gonna come back. He's eternal. I have eternal life. Okay. So next up, we're going to go to our break, and then we'll be back with your questions. If you have a question on the YouTube channel, just hit it into the chat, and we will answer any financial or tax question you have. And hit the subscribe button. Let's go into the thousands of subscribers, as this is our second ever YouTube show with JJ the CPA. So folks, do me a favor. Go to YouTube, search for Jelinski, Jalinski, or Financial Quarterback, and hit the subscribe button. And every week we post videos. So give us a call, 888-988-JOSH, for the special today, which is a 27 free ultimate financial game plan. We will show you 11 strategies, how you may be able to reduce taxes in your retirement plans. But you got to call us for the free webinar, 888-988-JOSH, 888-988-5674. We'll be back after these messages.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jelinski, the Financial Quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH. It's a great thing to do. If you're stuck at home under stay-at-home orders, call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today, and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jelinski, host of the popular Financial Quarterback radio program. 888-988-JOSH.
We're back. This is Josh Jelinski, the Financial Quarterback. We're being joined by YouTube celebrity JJ the CPA. You can check out his YouTube by going to JJ the CPA. Hit the subscribe button. You're up to 65,200 subscribers. And it looks like your latest video is you beautifying yourself before the appearance on the program. So if you want to learn about a little behind the scenes, check out JJ the CPA's channel. Over 1,020 videos of nothing but financial goodness. So JJ, what any other tips for Ernesto before we move on to the other questions?
Ernesto, if you have any employees, definitely still look at the employee retention tax credit. Also, what many are not paying attention to is that there is still a sick and family leave tax credit. It's retroactive, meaning you can still be taking it all the way back to April 1st of last year. It just got extended to September 30. Now, it's for those that are affected physically by COVID, either themselves or family or getting the shot or recovering from the shot, if you will. And that tax credit, though, is a dollar for dollar tax credit for the amount that the employee is paid. Now, there's dollar limitations, which I won't get down in the weeds on that, but if you paid an employee and they were out with COVID, it's up to $511 a day tax credit. If you have an employee that was caring for, it's up to a $200 a day tax credit. And then here's the deal. It applies to the self-employed. The self-employed don't get the employee retention tax credit on their revenue or their net income, but the self-employed do qualify for getting this tax credit that can be huge. So many are missing out on that. And I will tell you this, Josh, and I know that you have seen a lot of my videos, and for my wonderful subscribers, part of the JJ The CPA family here, and Carrie and Cam and Kevin and Greg, and we've got Robert of Philadelphia Salons, who's a lot of these have been from the beginning. But the thing to note here is that I am for firing your accountant if they're not reactive. And it was either Kevin or Mark that said, you have to call your accountant. And so what I tell people that come to hire me, I'm not taking on any new clients at present, but I always say, well, what was the issue? And if they say, well, they didn't call me back, I was, well, how often did you call? And or if they say, well, I don't get any advice, well, did you call them? And usually you're going to get your accountant's attention if you say, hey, I want to spend a little more money with you. I'd like to meet with you or talk with you. But I am a big proponent, and there's a lot of accountants, tax professionals, EAs, and CPAs, and the biggest downfall is they don't know how to say no. They just keep taking on new clients, and then it causes the quality to go down, but they just...
Or they don't charge enough. I mean, one thing...
Oh, I know.
I mean, sometimes I have people that come, I mean, there are some good CPAs I know, and they're like, oh, well, he didn't call me back. Well, I'm like, how much you paying him? And they're like, $300. And I'm like, well, that's why, so.
This is true.
I mean, so some of the accountants, you would do far better charging your clients double and actually being there for them. So we're actually giving business tips to accountants right now, which isn't the purpose of the show. But I love what Mark says. Mechanics don't call people with broken cars. Your CPA is an amazing tool, but you have to call. The workload is incredible right now. That's true. But I think as a profession, you're looking to elevate the profession. So you're the elevator.
Yeah, absolutely. Well, my second book, I'm going to grab it right here, is Cracking the CPA Code.
Whoa, look at that. That's a cool looking book. So, folks, we got to promote this book, Cracking the CPA Code. So this is if you're a financial advisor, if you're whatever, and you want to work with CPAs, we'll give you that book if you schedule a free webinar, business building webinar with me. Otherwise, you can buy it. But if you schedule
on Amazon, along with your book, Josh, I've got it.
Yeah. What the heck is the title of my? What is the title of my book? No, I drew a blank for a second. The Retirement Reality Check, an Amazon bestseller. My mom bought it 3 times, and no, it really was an Amazon bestseller. So keep it up. I was on an interesting call last night with the creator of the ShamWow and all these infomercial, millionaires. It was very interesting. And I don't know why I'm saying that, but it was interesting. The world now is getting smaller, right? Like there are these apps like Clubhouse and Zoom.
Clubhouse is taking off.
I was on a Zoom call with entrepreneurs and millionaires till 2 a.m. last night. It was so much fun. And, but it was good. We're helping people. Greg says, JJ, Josh Jelinski, and Nick Saban, that's all we need for life. Well, I think you need a relationship with God, too. So I would put that in the Bible. So anyway, what other questions do we have?
Josh,
go ahead.
Yeah,
Sorry.
We got a couple other questions I see here. Greg Roll Tide from Alabama, that on that alone was ready to claim you his favorite CPA, but then he realized. But Greg says,
he realized I wasn't a CPA. Wait, he realized I wasn't a CPA.
Yeah. Then he came back to me. But anyways, we know he's having a great time there. Greg's been on probably so many of live shows. But he said first draw is applied for. How long does she have to wait for forgiveness to apply for PPP2 single member LLC? Here's the thing to note. Filing for forgiveness is not contingent on anything. You don't have to file for forgiveness to get PPP2 or anything else. You have 10 months following the 24 weeks after you got your money. So when you get PPP1, you have 24 weeks plus 10 weeks before you have to apply for forgiveness. That is a long time. It's about 16 months when you add it up. The other aspect is between applying for PPP1 and PPP2 is 8 weeks. So if you got PPP1 in January, the SBA announced Friday that you now can apply for PPP2 even if you got the first draw in January.
That's amazing.
A period of time there. Yeah.
So can Ernesto in this case, can he get 1 and 2?
Well, if he were to apply now in March and they extend it to May 31st, then he potentially right at the end of May could hit that. Cam Jen has a question. What is the easiest way to get the PPP if I'm a gig worker? What are the steps? Go to your bank, go online. Gig worker's huge because it's now based on line 7. Get your Schedule C from 19. If you don't have your Schedule C done for 20, at least do the work. I've got a couple of videos on how to do a fast-track Schedule C for a gig worker. But long story short, it's simple. If for the gig worker, you don't even provide any documentation, zero. You go in and you complete it. You should get your money quick. We got Russell McDonald out in California.
Well, let's go to Russell after the break, and then we're going to go to Debbie. Debbie's calling in to the listener call-in line at 800-321-0710. And folks, if you call us now, 800-321-0710, you get to ask me or JJ the CPA any financial question you have. And during the break, head over to retirementrealitycheck.com, buy my book, and you'll be eligible for 3 free gifts. Number 1, the Maximize My Social Security.com calculation, normally valued at $40. It'll be yours free if you schedule and keep your no obligation 45-minute strategy session. Number 2, the 27-point ultimate financial game plan for retirement, where you'll go over ways to potentially protect your assets, maybe mitigate taxes in your retirement planning, and potential growth strategies that you may be unaware of. And the final freebie is the Risk Analyzer tool to make sure you are not too risky in these uncertain times. A lot of you are worried about political turmoil and its effects on your stocks. Give us a call now, 888-988-JOSH. 888-988-JOSH. 888-988-5674. We'll be back after these messages.
Josh Jelinski, the financial quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jelinski, host of the popular financial quarterback radio program, 888-988-JOSH, 888-988-JOSH. It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jelinski, host of the popular financial quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Okay, we're back. Debbie has a question on PPP. Go ahead, Debbie. You're on with Josh Jelinski, the financial quarterback, and Joshua Jensen, JJ the CPA. Go ahead.
Okay. So I wanted to know, I'm putting in, I'm a small business, and I'm putting in $40,000 into a SEP IRA. Can I use the PPP money for that, or can I use the ERTC credit for that if I can't use the PPP?
Go ahead, JJ.
Oops, I had myself muted on there. So you're putting money.
Well, that's a really nice jacket. Real quick, before you get to the answer, that's a really nice jacket. Where'd you get that?
You know what? I got to keep up with you, my friend. I believe I got this. It's Peter Millar.
Oh wow!
Peter Millar.
I get mine at the Brooks Brothers outlet on Black Friday.
Yes, you and I talked about that. Most of my clothes come from the very similar store, Brooks Brothers, and getting their deals at the outlet is phenomenal on that. But on the PPP, you know what? I broke my concentration. Tell me again, and I was answering some questions. I thought this question was for you, and I apologize. Can it be rephrased, or Josh, can you sum it, or can the listener?
Yeah, rephrase it. Our beloved listener, go ahead.
Okay. So I'm putting in, say, $40,000 into a SEP IRA for our employees. And I wanted to know, can I use the PPP money for that, or can I use the ERTC credit?
So believe it or not, on the PPP, you can put money into a SEP because it's employer paid. It's going to retirement, and therefore it is able to be included. The beauty of this is that with PPP, it's in addition to the wages. The other beauty of that is that if the owner is getting wages, which should be an S Corp or C Corp, the amount of money that's going into retirement, even on the owner, can be included. There are some limitations on that. And, on that real quick subject, I believe it was Steven said, hey, might ask Ernesto, but I'll throw it out versus a question. But Ernesto, know this, that if you are filing an S Corp or a C Corp, for you to qualify, you have to have paid yourself wages because that's based on wages. And then there is a cap on anything, whether you're a Schedule C filer or on the employees. So for each, the cap is $100,000 divided by 12 times 2.5, or $20,833 is the cap for the self-employed. And then for each employee, it is a cap of $20,833. But to the wonderful caller, the thing to note is that, yes, there's a cap on the wages, but there's not a cap on the amount. Now, the one last thing I'll mention to you is that the amount of SEP, though, is not just the full amount. It would only be the amount applicable to 24 weeks. So if it's an annual contribution, if you will, then you would take, that dollar amount divided by 52 weeks times 24 weeks, and then that'd be the amount you can include in PPP forgiveness for the employees. And then for the owners, that is going to be something that's capped at a 2.5. You would take that dollar amount divided by 12 times 2.5. So there would be some minor limitation. Now, on ERTC, you can use it for whatever you want. The requirement is just simply you pay the employee. The money that you get, you can use for whatever it is that you want for your business. So, yes, you would be able to use that money to put into the ERTC, or ERTC monies into a SEP.
Okay. All right. Great. That's great news. Okay. Thank you very much.
And let's talk. Subscribe. Yeah, be sure to subscribe. And you can also call us for the webinar, 888-988-JOSH. Here's the thing. A lot of people are not taking advantage of retirement plans as a small business owner. Let's talk about retirement planning for small business real quick. What are some things that the small business owner can do right now to save money on taxes and sock away money for retirement, JJ?
So we now know that the IRS, breaking news probably 72 hours ago, have extended the deadline for everybody related to 2020 filings. The one weird note here, though, is that the IRS did not move the due date of making first quarter estimated tax payments for 2021. That's still due April 15th. But they've moved the deadline 1 month. We'll take what we can get. So now everything is due at the federal level on May 17th because the 15th falls on a weekend. So the thing to note is that for the self-employed, you would then have till May 15th, the reason to mention that, to put money into either a SEP for yourself or a SEP on your employees' wages. And you have even beyond that with a SEP, because if you file an extension, you can fund it on or before the extension due date and get the deduction for the prior year. What is the SEP? The SEP typically is up to 25% of whatever your net Social Security or your net self-employment income for the Schedule C filer, and then up to 25% on your employees. And with the SEP, you have to treat everybody the same. If you have employees, you have to do the same percentage across the board. It goes to the employee's account, get the deduction. Of course, you also know we can have money that can go into an IRA, but related to a 401k, related to a simple, all of those have to be done through wages, and therefore anything now wouldn't be applicable because it would only be through wages in 2021. The other aspect, though, it's not about saving taxes. But you and I are fans, and many, if they're not, they're just not informed. They have not taken you up on doing a consultation with you. And that is this. When we're looking at a lifetime of tax savings, we're looking at generational tax savings. It is.
Well, we'll talk about that, and we'll reveal
life insurance,
some generational tax savings opportunities when we return. This is Josh Jelinski, the financial quarterback, with JJ the CPA, giving some generational wealth building opportunities as it relates to your taxes. Also, folks, have you looked into defined benefit pension plans? Have you looked into Roth 401ks? A lot of you make too much money to do a Roth, but you own a business, you can do a Roth 401k. Call us right now. A lot of small business owners just do the SEP. SEP's great to go retroactive for 2020, but you want to look at other opportunities for 21 as well. So call us 888-988-JOSH. We'll be back after these messages.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jelinski.
Josh Jelinski is your guy?
Listen, if you're 10 years or less from retirement,
which I am,
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jelinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
Talking generational wealth building opportunities. Go ahead, JJ. I thought life insurance was for losers, JJ.
I'll tell you what, it's for the Rockefellers. There's a reason that those that have money look at this, understand it. Not all products are the same, but it's whole life insurance. That's right. You might have some people that just said, oh, I'm out of here. Well, the reason for that is that you're just have been misinformed. And Josh, what's your take on whole life insurance in general? Because you and I have it on our kids.
Yeah, I have it on my kids. I have it on my kids. I have it on myself. Why? You're guaranteed to die and you're guaranteed to pay taxes. So why not protect your family, grow cash value tax-free? Also, the cash values are liquid, can be used for life, can be used for real estate, can be used for other investment opportunities. It's a great place to store cash. A lot of people we work with have significant amounts in the bank earning 0% to 1%, and it's much better to get greater utility on that money. It's very funny, JJ. We were ahead of the curve. There is now a TikTok celebrity. His name is Curtis Ray, and he's promoting some type of life insurance strategy on TikTok. The guy went viral. I've been having people asking about me. So we got to go on TikTok. You and Amanda have to do some dance with me. I don't know if anybody wants to see me dance, but apparently we're missing out. But life insurance is hot again. I've been having people asking me. They say, what about this life insurance thing I've been hearing? But here's the thing. You don't want to do that alone. If it's not properly funded, you could hurt yourself. And some people will say, well, I did that in the 80s. Well, that's because they did something called vanishing premium. They weren't ethically selling the product. So make sure you are careful when you're constructing it, but it's a great way to have conservative wealth. Final comments on that, JJ?
Yeah, Greg mentions on the life insurance. So we all are going to die. It's not we're betting you will die. We all will die. Hopefully that's not breaking news for anybody. It's
breaking news. Breaking news. Yeah. We all have a 1 in 1 chance of death.
Yeah.
But to me, that's liberating.
Greg knows I'm kidding around. Yes.
To me, if I know, real quick, if I know that my heirs are going to get millions if I die tax-free, then I can enjoy today. I can take that vacation. I can love life. So I'm not worried about death. It's liberating because I've protected those who I love the most in the event of my untimely passing. Go ahead, JJ.
Well, really at the end of the day, the whole life insurance, it's not built the same. You have to look at it. And if you already are coming with the mindset that it's a scam, then you need to pick up my first book, JJ The CPA here, Top 60 Questions. I break it down simply. I bet Greg has a copy. I break it down simple about life insurance. People just get angry about life insurance because they don't want to talk about dying. So they don't want to talk about dying. So how do they make that subject go away? They just get mad so no one will talk to them about it. One of the reasons I'm a licensed insurance professional is because, yes, there are a number of life insurance salespeople out there that are snakes. I get it. But when the CPA is involved with it, Josh Zielinski is involved with it, you should be able to count on it, but you can't do it alone. You really shouldn't do it without Josh. I won't be able to sell you any life insurance. Only Josh will be able to do that.
Thank you so much. This is Josh Zielinski, the financial quarterback. I was going to say Josh Zielinski, the CPA, with JJ the CPA. I am not a CPA. I'm not giving tax or legal advice. So give us a call, 888-988-JOSH. If you want the free retirement reality check, go over, subscribe to my YouTube channel, The Financial Quarterback, and subscribe to JJ the CPA. Up next at 800-321-0710, I answer any financial question you have. And we'll go into insurance, we'll go into investing, we'll go into stocks, we'll go into the broader perspective of the economy. And next time we have JJ on, I don't know if he can stay on, but I want to talk about the 1099 bill, the bill that will hurt gig workers after this. 888-988-JOSH.
And WAXQ HD2 New York.
The eyes and ears to your world. We are the voice of New York. 710 WOR.
An iHeart radio station.
It's 35 degrees at 10 o'clock. Good morning. I'm Paul DeCastro. Well, New Yorkers are speaking out against the deadly rash of crimes against Asian Americans. Lorenzo from Astoria talks about the shootings in Georgia being explained away by local authorities.
Blaming it on sex addiction is a lazy way of trying to sweep this under the rug and excusing someone.
The peace vigil on Friday in Union Square attracted big crowds, including Senator Chuck Schumer and Mayor de Blasio. Hate crimes against Asians have increased in the city, and the mayor is urging people to help at nyc.gov/stop Asian hate. New York City schools will hold a new opt-in period for in-person class beginning next week. James Flippin reports.
As follows changes to CDC guidelines that say kids now have to maintain 3 feet of social distance in schools, along with masks. So now, kids that have been all remote since the start of the year get a chance to return. Mayor Bill de Blasio saying it will happen in phases.
We are confident that we'll be able, in the course of April, to bring back the younger students through an opt-in.
But he says with more kids potentially going into buildings with boosted capacity, students already in class won't have their schedule cut back. James Flippin, WOR News.
Japanese officials say a magnitude 7.2 earthquake has struck off the coast of northeastern Japan. There are no immediate reports of damage. A tsunami advisory has been issued for the region, and those living in coastal areas have been advised to move to higher ground. A woman is under arrest and accused of stalking Saturday Night Live star Pete Davidson.
Police arrested Michelle Mutretti Thursday afternoon and said she illegally entered Davidson's Staten Island home. Investigators say a family member was home at the time and called 911. Mutretti also sent out a press release earlier this week claiming to be married to the comedian. Davidson's attorney says that his client has no idea who she is. I'm Lisa G., WOR News.
In sports, the round of 64 in the NCAA tournament continues today. Rick Pitino and his Iona Gales will face second-seeded Alabama at 4 o'clock. Rutgers and Syracuse were both winners on Friday, and they'll look to advance to the Sweet 16 tomorrow. Rutgers will take on Houston. The game tips off at 7:10, and you can hear the game right here on 710 WOR.
Here's your WOR Weather Channel forecast. The high of the Saturday will approach 57 with sunshine and light winds. Overnight, a low down to 39 under a clear sky. The warming trend continues tomorrow with sunshine at a high close to 60 and a dry start to the week on Monday. Mostly sunny with a high eventually hitting the upper 50s. I'm meteorologist Jeff Marr.
Next news at 11, breaking news at 1. Start your day with Len Berman and Michael Riedel in the morning, 6 till 10 weekdays. I'm Paul DeCastro on 710 WOR, an NBC News radio station.
Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jelinski. Josh is a noted financial advisor and president of the Jelinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jelinski.
Oh man, we pulled a rare coup. We have JJ back for as long as Amanda will allow him. What are you doing today, JJ? You having any fun plans? I have to schlep my kids to baseball, and hopefully CJ can give my JJ the tips. Well, he took like a year off of baseball due to COVID, and I don't know if you know, but we're in the Little League World Champions homes. These kids are like insane at 9. You know, I go to these kids and it's like, for one, in Tom's River where we have Little League, they fast pitch the adults throw the pitches in T-ball. So that was like interesting part number one. So like if you're 5 and you're still batting from the tee, you're like a loser. So they quickly weed you out if you're playing with the tee and T-ball. No, I'm kidding. They are gracious to the kids who hit on the tee. But I was just shocked at my kids hitting pitches at 5 and 4. Yeah. But he missed a year, so he's 9. And man, it's a lot of work, as you know. And then he's on travel soccer. They're all too many sports. Having 6 kids with all the sports, it's like I've turned into a chauffeur. So,
oh my gosh, yeah.
You have any fun plans?
You don't just hire an assistant to just help with that, a full-time Uber driver.
I do. I might. You know, I may. You know, I had an Uber.
Today, my
go
son
ahead.
has 2 baseball games. Today, my son has 2 baseball games. They moved one of the games a little later, so I'm happy to and appreciate being on the second hour with you. And, you know, there's probably a number on YouTube that maybe you don't know if you're coming from my channel, but Josh, this YouTube is new, but Josh is not new to the scene of getting the word out, providing advice. He is up and down the East Coast on New York radio, but then nationwide on iHeartRadio, and phenomenal ratings. So it's an honor to be with Josh. Josh is here. I'm probably right about here. Josh, you're here. I used to be down here. Wasn't even on the screen. And I think when you first had me on, I might have been around 10,000, 12,000 subscribers.
No, JJ, you were at like 20. You were at like 2,200, 2,400. And I was like, this guy's amazing. And I actually discovered you when you were around 959, where I am now or something. But I had you on the show at about 2,500 because you just started to peak. And I'm like, man, nobody in the country knows this stuff like JJ, because I was researching the show for PPP. And you went, kind of viral. And
yes,
a lot of the people in New York then had you on their stations. So it's funny, news travels fast when you know what you're talking about. So it's interesting. Our podcast, I found out we are the 7th most listened to iHeart podcast behind Charlemagne the God. So my goal is to overtake him. That's my goal. So we're going to have an aggressive campaign. They told me this was all non-paid, organic. We were 7th. So folks, make me more listened to than Charlemagne the God. Go to the iHeartRadio app and download my show. Subscribe to The Financial Quarterback, because Charlemagne the God, for real. Wasn't that the guy that Joe Biden went on his station? But I'm not going to say what he uttered. So that's pretty. I'm in good company to just have you on, and that jacket is really nice. You've really come up in the world. You've gone from Brooks Brothers outlet to some custom clothier, and then you have some boutonniere on. Man, he really dialed up for us. Ernesto, you got to dress up nice. You got to see Ernesto's Instagram. He does these amazing pictures, JJ. So
we need to type it into the comments.
So follow him on Instagram, Ernesto Cullari, ErnestoCullari. Somebody said I used to know Ernesto when his name was Ernie. I didn't know they called you Ernie.
That was my nickname growing up. Yeah. So anyone in church that we know together, from grade school would definitely call me Ernie.
Yeah, but Ernesto was. I remember when you changed to Ernesto. It was cool. I'm like, if my name was Ernesto, I'd go by Ernesto. I wouldn't go by Ernie.
Yeah. I go by what my mom calls me. She calls me Ernesto now. Yeah. So.
And I don't have. My real name is just Josh. It's not Joshua. Although I love the name Joshua biblically. I was named after my dad's best friend who died in Vietnam. His name was James O'Shaughnessy. My mother hated the name Jimmy. No offense to those named Jimmy. I love the name James. But they took the J from the James and the Osh from O'Shaughnessy, and that's how they got Josh.
Wow.
So phonetically, really my name should be Josh. But that would be kind of weird. So we're having fun, as much fun as a financial show could ever have. But I wanted to bring you back because there has been a new development. By the way, we're going to talk about retirement plans because, folks, there are so few deductions left. So we're going to go into retirement plans, SEPs, defined benefit plans, life insurance for dummies. Do you have a cigar in your mouth? Does he have is that a cigar?
Yeah, we're gonna have fun.
Yeah, let's have fun. You're allowed to smoke a stogie on the Financial Quarter. So here's the thing: you could do it. Enjoy yourself. We got to have fun here.
That's right.
And that's also why my radio listeners can also find us on YouTube, so they can see. You got to smoke a stogie on the YouTube at 10 a.m.
On my channel,
people would enjoy that. I think the New Yorkers, you're a hit in New York. I mean, Robert and Philly, because I was also in Philly. So Robert of Philadelphia Salons, good for him. He said you saved his business. You saved a lot of businesses. I did as well. I mean, I remember, folks, when the world was ending, JJ, for no economic remuneration, and myself, by the way, people are like, oh, you're doing this for your health. I don't really make anything doing the radio show. We get benefit from listeners who then become clients, but we were doing 4 live hours every weekend on the 2 biggest AM talk radio stations. Maybe the top 1 to 4, some ABC, WOR. We were going live. I'm off of ABC now, so we're just on WR and iHeart app. New ownership there thought, I don't know, pill pushers or something were better than my show. But they probably paid him more money or something. But as it relates to the gig economy bill. I want to talk about the gig economy bill, but we did this for free. We were just like, it was like two guys, on a street corner trying to give help to small businesses. And people would be like, why are you doing this? Do you remember, did you receive any venom? People would be like, why are you doing this? You're doing this for selfish reasons. Of course, we want to grow our businesses. But we really saw, I remember we had this talk. We were preaching. We were so excited about it. We were like, well, we are here because you, the small business owner, are going to save the American economy. And we were pleading with President Trump and Secretary Mnuchin to make it more available. And they did. And PPP really came through for the small business community. And folks, people badmouth PPP. I did not lay off workers because of PPP. And many people did not lay off workers because of PPP. Some did, and shame on them, but we didn't, in part due to you. So you saved a lot of jobs, JJ. And the beauty of PPP, folks, is you didn't need to rely on unemployment. It was to give a hand up, not a handout. When Kanye got PPP and everybody, gave him a hard time. Well, Kanye gave that PPP to his workers. It was a part of the stimulus. It's why the economy bounced back so quickly. And you want to talk about that before we go into some of the other issues?
Yeah, if you look at, I think if we are talking about ourselves a little, the initial videos that I was doing probably in the first 6 weeks, they were for my clients. And I really didn't have any thumbnails. I didn't do anything super sexy on it. And then I started doing thumbnails. I didn't really know what I was doing. But all to say, I think that that's probably what came through is I was just doing videos for my clients. And it was only because the information was coming out so quickly. And then from the perspective of not taking on new clients, for doing CPA work, it requires, time, and I want to make sure that I'm able to provide the quality. That's why I haven't brought any.
No, thank you. Well, we have Greg who has a question. He's a Schedule C filer. He needs PPP info. Go ahead, Greg. You're on with Josh Jelinski, the financial quarterback, and JJ the CPA. Go ahead, Greg.
Yes, good morning. I just, I heard about the PPP today, and I'm a Schedule C filer, had no employees. And, I don't know if it's something I'd be eligible for, so maybe you can be a little primer on something like that.
Absolutely available for you. It's a Schedule C that would only be required for the self-employed. It's now based on line 7, which is gross income. So go to your Schedule C. It's either based on 19 or 20. You get the higher of. You apply at the bank. You don't provide any documentation. Of course, the SBA at some point will verify the information that you have provided. The Schedule C filer, it's based on line 7, as I indicated. Now, no more than $100,000 divided by 12 times 2.5 or 20,833 is what you qualify for. And all I mean is that it's a calculation. You go to line 7, whatever that figure is, divided by 12 times 2.5 is going to be your amount, but there is a cap. The cap is at the beginning of the calculation, which results in the cap at the ending, which is 20,833 for the self-employed gig worker. And then if the self-employed happens to have employees, then they get PPP in addition.
But that's if you paid yourself wages, though. If you're one of these small business owners where you make $100,000 and you show $20,000, you're going to get less, correct?
Well, that is correct for the S Corp owner, the C Corp owner. They have to pay themselves wages. But for the self-employed, in fact, I've got a couple of videos on it because there's banks that somehow are still confused, which is amazing to me that they would be. But nonetheless, for a Schedule C filer, they're actually not even allowed to pay themselves wages. If they chose to, the IRS said you're not going to even be able to deduct it. So the self-employed, I'm glad you brought that up, Josh, is that it's just based on line 7 and then wages to the employees. But for those that own an S Corp or a C Corp, you're absolutely right. It would only be based on the wages. And then for any employee, the beginning of the calculation for any employee is $100,000, so no more than $20,833 per person, if you will, that's going to get W-2 wages. The 1099 people that you're paying a 1099 to, that does not qualify as wages. Hey, if you don't mind, I want to throw in Richard the CPA had a question, and it is, I think, a question that a lot of people have going into this. So Richard is a Brooklyn CPA, as he says in his comment, has a dental practice, etc. No contact between health and death in the family. So my question is, can I apply for PPP1 if my own CPA practice, 30% increase revenue 2020, needs a certain...
So wait a second. Richard's a dentist and a CPA. Is that correct?
Well, I think 200 dental practice, etc. I'm gonna.
I think I know this guy. He's been on before. I think he is a CPA who specializes in dental practices.
Mm-hmm.
I think that's what he's talking about. So, but he's
yes, and Richard's on JJ the CPA often, so we appreciate it. And basically, here's the bottom line for PPP1. It doesn't matter what the revenue is. However, you do have to certify that you're in financial dire straits, that your financial outlook is uncertain, that you need this money to keep going. That's either for PPP1 or PPP2. But there is no, well, if your revenue is up, you don't qualify. All I would say, though, is if your revenue's up, then you may not be able to meet the certification of indicating that you're in need of that. So that's the way I would go with that. And then
let's take a short break, and then we'll be back with more comments and questions. And we're going to talk about this gig worker bill and what it means. I don't know how much research you've done on it, JJ, but it seems alarming. It recently passed the House and could affect many industries that hire 1099s. So we'll talk about that and more. This is Josh Jelinski, the financial quarterback. Don't touch that dial.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jelinski, the financial quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH. It's a great thing to do. If you're stuck at home under stay-at-home orders, call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jelinski, host of the popular Financial Quarterback radio program. 888-988-JOSH.
Josh Jelinski, the financial quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jelinski, host of the popular Financial Quarterback radio program. 888-988-JOSH, 888-988-JOSH.
We're back. We have a really lively discussion on the YouTube. The YouTube discussion is maybe more entertaining than the show. So go to youtube.com, search for Josh Jelinski, the financial quarterback. A lot of people in the YouTube chat room asking any financial question they have. We want to go to financial questions. We have Jeff, who is a question on ERTC and income level. Thank you, Jeff, for being faithful.
Hi.
You've been trying to get on for a while. I'm sorry to delay.
Well,
go
thanks
ahead.
for taking the call. So a question I have, 2 questions on the ERTC. One, if your income is not low, 20% low in the first quarter into 2021, but is low in the second quarter, can you take it for the second quarter? And the other question is for 2020 ERTC, did your income have to be down 50%, not 20%? And can you still claim the credit if you haven't claimed it yet, if you were down 50%?
So the employee retention tax credit, great question. Thanks for calling in. let me just give a quick overview, very, very quick. The employee retention tax credit in 2020 is if you had a significant decline in gross receipts is defined as 50%. You're comparing that quarter in 2020 to 2019 to determine if you had that reduction. In 2021, it is only a 20% decrease in gross revenues, gross receipts, and you're still comparing it to 2019. So first quarter 2021 is compared to first quarter 19. Now, there's a little caveat I'll throw in there that if fourth quarter 2020 is down at least 20% according to fourth quarter 19, you would qualify for first quarter 2021. But let me be clear, in fourth quarter 2020, for fourth quarter 2020, you have to be down 50% to qualify in fourth quarter 2020. Now, yes, you can go back. It's retroactive. You'd file a Form 941X. It's on any wages that were paid March 13th and after. The other way to qualify, and it's not both things that need to happen, it's either or. If the government has an official order that either partially or fully closes or shuts down or affects or limits the business, then during that period of time, you would also qualify for the ERTC. So some have both circumstances. Here's the big thing. If you're down gross revenues, then the wages qualify for the entire quarter. In 2020, if you're 100 or less employees, then all the wages during the applicable time of qualifying for ERTC, you get to include all wages, whether they worked or not, essential or not, exempt or not. You get to include all wages. In 2021, it's 500 or less employees, and you get to include all wages. Now, if you're above that, then you only get to include wages for those employees that were paid and did not work. So it's 100 employees or less, 500 or less in 2021. 2021 has been extended to 12/31 now, the American Rescue Plan Act. It was to end June 30. It now ends December 31st of 2021. Here's the biggest thing I want to make sure everybody hears, Josh. You ready for this? In 2020, it was a $5,000 per employee tax credit. In 2021, it's a $7,000 per employee tax credit in each quarter, which has been up to $28,000 tax credit in 2021. Now, owners, I don't think it's an opinion anymore, owners that own over 50%, their spouse, their family, those wages are not included. So definitely need to take a look at this. How do you get it? Form 941X for 2020.
How do you get this? Well, wait.
Yeah.
We got to get it a little bit more so that the rest of us can understand it. So a lot of numbers thrown out there. You got to talk to your accountant about the ERTC, and you're eligible if only you had a decrease in 2020 or what? So if you did okay in 2020 or better in 2020 or the same, you can't get this, correct?
Well, let me back up for 1 second, if you don't mind.
Sure.
Go to JJ The CPA YouTube after this show, okay? And I have at least 100 videos on the ERTC. I have a playlist on the ERTC. I have a seminar, 7-hour seminar, a 5-hour seminar, 10 videos, calculations, Excel spreadsheets, gross receipts calculations. So I have 5 different Excel spreadsheets for you to break out. I did sell the seminar. It's $197. You're getting, 25 hours of videos and tons and tons of links and how to do it and how-to videos. And so jjthecpa.com, you'll find how to sign up for that. It's instant access to all of that.
Wow.
Yes, there's a lot to it. Josh. But to answer your question, you're always comparing to 2019. So when you're trying to determine if you're down in 2020, you compare to 19.
And you have to be down by how much percent?
Yeah.
25%?
If you're trying to determine how much you're down in 2021, You still compare it to 19. Now, to answer that question, you have to be down 50% in 2020 compared to 19. Then in 2021, you have to be down 20% for the quarter, still compared to 2019. So much lower threshold in meeting the gross receipts.
So let's say you had a better 2020 than 2019 by some luck of chance or blessing of God, but then 2021 first quarter was down because maybe you have a funnel. A lot of businesses will have a delay. You still get it, but you only get it for that one quarter. Is that how that works?
Yeah, you hit it right. If 2020 is up, you're not going to qualify on that criteria. But in 2021, if your first quarter is down from first quarter 19, then you're going to qualify for first quarter 2021.
And by the way, folks, I'm seeing that. You know why we're seeing that? We're seeing that because of the threat of tax hikes. A lot of businesses are saying, whoa. We believed because we were given some tax breaks, we were given some PPP, but now, the business owner is the enemy now. So tax hikes are coming. People are thinking capital gains raises, all these things. So people are like, whoa, let's slow down. Let's slow down our spending for business. And that's why we have to keep this pro-growth, low-tax mindset. So we have Tony, who has a question on reporting income from liquidated trusts. Our listeners are the smartest people in radio and now YouTube. So go ahead, Tony.
You're on. Joe. I have a question for the CPA in reporting income on my tax return. I was an owner of a bank stock 15 years ago that went bankrupt during the financial crisis of 2008. And in 2020, I received a letter indicating that there was a liquidation of the trust set up as a result of that bankruptcy. I received a letter indicating I have some income from it, but it's not a 1099. It's a letter from the trust. How do I report that income on my tax return?
So typically, money that's getting allocated to you from a trust that is not interest income, it is not dividend income or capital gain, because typically that'll come on a 1099 INT or a 1099 DIV or a 1099B. So the fact that you've got a letter and it didn't accompany anything else, it would be on Schedule E, page 2, down at the bottom. You will see a section where you report income that you're getting from a trust. So let me be clear, not all income from a trust would go on Schedule E, but in the absence of knowing what it is, I would be putting it on Schedule E, page 2, to be clear. There's a Schedule E, page 1, that's for rental activity and royalties and whatnot, but it's Schedule E, page 2, that goes along with the Form 1040. It'll be ordinary income taxed, and so pretty safe bet that it's going there. I would follow up, if you are able, to see if there's a K-1 that goes along with that, because on a Schedule K-1, it will then break out if it is something other than Schedule E, page 2 income. It could be that it is interest or dividends or capital gains or royalties, etc. So when a trust has income, it keeps the same tax characteristics as if you had earned that yourself. But at the end of the day, you would want to then put it on there. I would make sure this, though, that just because you are getting money, cash from a trust, doesn't always equal the amount that you pay tax on. It sounds weird. That's why I'd ask for the Schedule K. I'm going to say, hey, Richard, the CPA, you're just going to have to email me. I'm not able to keep up with comments clear enough. So email me, Richard, so that I can clarify what you're asking, if you don't mind, Jay. That's Richard, the CPA, great fan of this. And on that trust, make sure that what you're having to report is taxable income.
It mentions in it that it's a distribution. It's not a large amount. It's less than $1,000. It gives a distribution and a net operating loss, which is a small fraction of it.
Yeah, it sounds like you could use an appointment, give us a call, 888-988-JOSH. We could hook you up with somebody to talk to. Folks, we have available a free 45-minute webinar, complimentary, if you schedule and keep your no obligation review. And folks, this is a rare opportunity for you to get a 27-point ultimate financial game plan where you can learn how to protect your assets, potentially minimize taxes, and grow your wealth in these uncertain times. A lot of you are concerned about the economy, about an economic slowdown. We're going to talk about one way we could have an economic slowdown next, the gig worker bill. This is Josh Jelinski, the financial quarterback. Call me right now, 888-988-JOSH, and go over to retirementrealitycheck.com and check out my YouTube. Search for The Financial Quarterback on YouTube and hit the subscribe button. We'll be back after these messages.
It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jelinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Gig worker bill. So, JJ, what's going on with the gig worker bill? It just passed the House. It was meant to punish Uber, but it's probably going to punish small business owners. A lot of people don't even know it passed the House. Have you been following that at all?
Well, if I'm following it, I really don't understand the drama over it. It doesn't even make any sense to me. I don't see how it ruins a small business owner or a gig worker in the slightest, because here's what it is. All it means is that you're going to get a 1099-K for transactions that you were paid on by credit card. But here's the thing. You've already committed fraud if you haven't reported $1 of income. So whether you get a 1099, whether it's a 1099-K or a 1099 miscellaneous or any 1099, you have to report the income. So it is silly. It is ridiculous. I don't know what the drama is all about. I kind of find it insulting when people say this is ruining businesses. It is ridiculous to say that at all. What it's doing is outing those that are not reporting all their income, which is fraudulent, starting with $1. Here's all it is. Before, a credit card company didn't send you a 1099-K unless you had run transactions through, and I think it was around $20,000. Now they're going to send you the 1099-K if it's over $600. Big deal. You should have been reporting the income anyways. Whoever's making drama out of this needs to cut it out, because all they're promoting is that small business owners should be able to commit fraud, which is wrong. So I couldn't be more strong on this, as you can tell, Josh.
Yeah.
This is ridiculous that they're saying it has any effect to small business owners. Ridiculous.
No, what I'm referring to maybe maybe a different provision of the bill. There was a bill that passed the House, which I know affected the financial industry. SIFMA put out an email. The bill that passed the House, it didn't pass the Senate yet, where the financial industry and others were seeking a carve-out. So I want you to use your powers of research on that bill. But if it's something, it's rather odd. It's forcing, so let's say in the financial industry or realtors, it's forcing 1099 workers to be then W-2 workers so that the employer pays into their Social Security wages. Maybe I'm calling it the wrong thing. There was a gig worker bill, which I guess is the one you're talking about, that I believe that was a part of the stimulus bill, Section 9674. I'm speaking about HR. I'll get you the number. It's a very alarming bill because it's basically meant to punish Uber. So Uber drivers are 1099s. And it's saying basically they have to pay them as W-2 workers, not 1099s. It was meant to punish the Etsy's of the world, the Ubers, but I guess to withstand lawsuits that would come, they made it applicable to almost every small business owner. So it's something that I want you to look at in the future.
Yeah, I will. There's two issues with the Etsy and the eBay. It's on the 1099K that I had talked about. Uber already won, so I hear what you're saying. And the Form 1099 NEC is tied into that. And I hear what you're saying related to the definition, but definitely we'll take a look at it. But for the Etsy and the small business owner that's selling, they're getting a credit card transactions. That's the thing I was talking about.
Yeah. You should definitely be, if you're making income, 20 grand a year in your Etsy, and you don't report your income, that's a real problem. But let's say you made 20 grand on Etsy. What can you do this year to save on taxes last year? Well, you could put money in an IRA. I mean, it's simple. It's basic. But you have till when now? Is the May 17th, the May deadline now when you can put money in an IRA and get a quick write-off? Is that true right now?
That's right, May 17th. That's right, because the deadline got moved for the entire country. If you're in Louisiana, Texas, or Oklahoma, you have till June 15th because of the natural disasters that occurred.
So you have till May 17th to do a traditional IRA or a Roth IRA. 7 grand comes off your income. Also, what about, I had a question from a listener friend, and we'll get to it, about, let's say you have somebody making, I don't know, 75 grand a year. Do they still have that, credit where you get the savers credit? So you get not only the write-off from the IRA, but you also get an extra $1,000 or $2,000. What's up with the savers credit? Where are we with that?
Yeah, so it did get extended on the savers credit. Basically, depending on your income level, you can go to irs.gov to get the details related to it. But basically, they're giving you a credit, and at the beginning part of it, it pretty much offsets, meaning you're getting reimbursed for what you put into it. So the
up to how much? Up to how much?
Yeah, so it depends on your income level. That's why I'd have to say you'd have to take a look. There's a credit rate of up to 50% of what you'd put in. So really it wouldn't be fair to say, well, what is the dollar amount? You'd have to go, because it's a sliding scale in terms of determining what the dollar amount is. And so anyways, go to irs.gov, just put in the savers credit. I'm looking at it right now, and it walks you through in terms of how much you'd be able to qualify for.
And that's such a miss. I saw a comment from a YouTube guy who says, basically, how can I get ahead? The guy's been busting his hump for 20 years, 7 days a week, 24 hours a day, or, probably not exactly that, but, I'm sure he sleeps a little bit here. But he goes, how can I get ahead? Well, if he just maxed out his IRA for 20 years, he would be a millionaire. You don't have to be rich to max out your Roth or your IRA. So a lot of my stuff, people say, Josh, I'm not rich. I don't have a lot of money. What do I do? Put away $400 a month. You might say, but I'm 50. How do I, do it? Well, I want to think of some nice proverb like the long journey starts with a single step. What's that proverb? I love the Bible verse, do not despise the day of small beginnings. Meaning, just take that simple step. We got a guy, he goes, what does he say? He said something, I saw him before. He was struggling, basically. And he was saying, I'm busting my hump. He feels kind of worthless and still broke. You know what, buddy? You're not worthless. You are a child created in the image of God, and you're not worthless. But with that attitude, you're not going to really amount to anything. So we want to make sure that you have a better attitude, number one. And number two, start putting money away, a couple $100s a month. Do it in an IRA, you get the tax credit. So basically, you're putting a couple grand away. They're giving you a couple grand, plus you're not paying taxes on that money. Or you can do the Roth where it grows tax-free and you get to pull it out tax-free. But there's hope for you, folks. Just start paying a car payment to yourself. Pay $200 or $300. You don't need a Benz. You don't need a Tesla. Get all these like 20-somethings. I want a Tesla. You know what I drove when I was 20? Nothing. I drove like my brother's old Hyundai Excel where the muffler was scraping the bottom of the street. And you know what?
I had to borrow my brother-in-law's car for a tax season, which is a LeBaron that was about 10 years old. I had a truck with no AC, but you know what? It builds character.
A LeBaron, that may be. Was it the John Voight LeBaron?
And did he wear Capizios while he drove it?
Couldn't even been that cool. Couldn't even been that cool.
The John Voight LeBaron. Do you remember that episode? That was funny. So I went from, but the pathway to wealth is often not elevating as soon as you start making a little money. And I'm talking 30 grand, 40, 50. Do not buy a new car. Run your car into the stinking ground. Take the $300 a month. Who are you trying to impress? Some woman that ends up leaving you because you don't have enough money? Because you can't buy the next high-end car? My wife loved me when I had nothing. And that's a good test of a good character of a spouse. So oftentimes, though, people go like, I'm 18 to 30. If we have 18 to 30-year-olds with no money, this is the time where you could save a fortune. But by the way, if you're 60, you could save a fortune. You don't need more than 30 grand a year to live. Food, clothing, rent. So if you make 50 grand a year, you could save 10 or 20. But people go, oh, Josh, I don't want to do it. Well, you know what? That's why you're poor. That's why you're broke. That's why you have the wrong spouse, because you're trying to spend money on them. People go to the bar every night. If you took that money that you're going to the bar or going to Starbucks and saved it, you'd be a millionaire. So we're going to be back. Sorry for my little interjection, JJ, but I was inspired by our comment of our friend who's feeling worthless and constantly broke. So broke is a mindset. And that's not just, personal power of, whatever that, garbage is on infomercials late at night. You have to start the journey. Long journey starts with a small step. Make that small step today, buddy. And you can do it. Pay yourself a car payment and you will, maybe not now, maybe not next year, but 10 years, you'll feel the benefits. So we'll be back after these messages with JJ the CPA and more questions. Up next, this is Josh Jelinski, the financial quarterback. Don't touch that dial.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jelinski.
Josh Jelinski is your guy?
Listen, if you're 10 years or less from retirement,
which I am,
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jelinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jelinski, the financial quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH. It's a great thing to do if you're stuck at home under stay-at-home orders. Call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jelinski, host of the popular Financial Quarterback radio program, 888-988-JOSH.
Okay, we're back with JJ the CPA. So JJ, give us some tips on how to save money for retirement. We talked about it, but break down some of we have the traditional IRA where you can sock away up to $7,000. We have the Roth IRA where you can sock up to $6,000 or $7,000. A lot of people don't do that. You know, we said pay yourself a car payment. You know, if you're just starting out, pay $300 a month, pay $200 a month, pay $400 a month. If you don't have it, pay $100. You have the traditional 401k if your business owner does that. You have the Roth 401k. You have the SEP IRA. Talk a little bit about the SEP. It's a little known tool where people can get, you mentioned it, but just break down a little slower because meaning a lot of people don't realize you can put money away for 2020 and get a write-off. So if your accountant says you owe money this year, you can actually sort of it's like going back into a time machine to get an extra write-off when usually you should do year-end tax planning, but it's like you're stepping in a time machine. So talk about that.
Yeah, I tell you what, though, Robert of Philadelphia Salons, he's actually out of Florida, but a great fan, a great friend, and actually he was my one new client in 2020. I fibbed earlier. I said I don't take on any new clients. I take on one new client every year, but he is saying we're providing a lot of great value, so I appreciate that. And that's where this is such a great show that you're putting together, Josh, because you're bringing together other experts, and you've had some big-time experts on over the years and putting together this information for others. And this SEP that you're asking about.
Wait, real quick, before the SEP, I want to talk about the SEP, but these comments on YouTube are funny. Greg says the proverb is, how do you eat an elephant? One bite at a time. Just start saving something. And Greg's best comment of the YouTube, this is why you want to download the podcast weekly. You want to subscribe to our podcast on the iHeartRadio app. You want to make us bigger than Charlemagne the God. However, what's interesting here is Greg's comment above was probably the best comment about you, JJ. I remember when JJ had a cheap suit and a white board. That was like March of last year. And he goes, a lot happens in a year. That's the comment of the day.
Yeah.
And then June said, June is a listener friend of mine. She goes, JJ has a better desk than you. Now June is like a family member. I love June like a mother/aunt. And she sends me an email. She goes, that's the desk you should have in your office. And, I'm very low on overhead. So it took me, I've been in business for like 16 years before I got a nice chair. So this chair that I'm sitting in is the nicest chair I ever had. Now you might say, well, it doesn't look that nice, but it feels nice. So, but it was the first chair I actually bought. I actually got all my office furniture from a mortgage guy who was going out of business. And I don't know, I paid him like $900. And then I bought a building, and it was an old bank, and they had old office furniture. I mean, people go broke on office furniture. So my idea was always like, I'm not going to spend any money on office furniture. But June may pull my arm, man. That desk looks beautiful. Yeah.
Well,
where can I get that desk?
Yeah, well, I appreciate that. I got it here, local Mathis Brothers. But I'll tell you, the first office that I had was literally 9 by 10. It was 90 square feet. And I got a desk down at the used furniture store. I took it and in the garage, sanded it down and painted it a mahogany. And I had that desk for 10 years. Anyways, I hear you. And but on this one here, this was I believe I got it when I celebrated I got it when I celebrated my 10-year anniversary of my firm, and I treated myself to that. Hey, so on the SEP and on the gig worker thing, I looked at it and I'm following it. I just didn't know it was called the gig worker bill, but and that's just because that's a slang. But on the SEP,
it isn't. It's called something else. It's like the but I'm worried about it because they thought there were going to be carve-outs. So it was just going to attack the Ubers. But it seemed like it was a big money grab. And the idea was, as people were abusing 1099s versus W-2s, and we're against that.
Yeah.
But what it's going to do is have an adverse effect of employers like me either paying their 1099s the same, and then the 1099 worker has to be paid more, or they'll be laid off because you can only have W-2 wage earners. So there's a lot of issues with that bill. I haven't read it or exposed it as much as you have other bills. So I think we could do some YouTubes on that. I'm really curious because we have to influence the Senate to basically smack this bill down or to significantly carve out it. Because what I'm reading, it's not good. But go into the SEP. Into the SEP.
So on the SEP, it is, as I would call, sexy. It is a sexy tax deduction. And why? For what you had said, which is the year is done. There's not much you can do to save taxes on 2020. It's pretty well done, other than what you had mentioned previously. But with the SEP, it's something that you put money into it this year in 2021, and it yields a deduction for 2020. The SEP is also amazing because you can not even have a SEP today, but you could set up a SEP all the way until the extension of your tax return, assuming you extend it. So for a small business, they would have all the way until September 15th to put money in a SEP, all the way till October 15th for the self-employed to put money in the SEP and get a deduction for it in the prior year. How is it calculated? It's up to 25% of the self-employed income, and then up to 25% of the wages. Now, if you have employees, you have to do the same amount in terms of the percentage as you do. Now, of course, there are limits, and in 2021, if you're doing it for 2021, then the limit is $58,000, and then the limit for 2020, I'm trying to look at
$57K. $57K. So, folks, that's a $57K deferral of income. That's incredible. So, if you want help, if you want to know if a SEP's right for you, give us a call. I also heard from our pension actuary that they changed the rules on defined benefits, that used to have to be done by December 31st. And now that is actually coupled with the other bill. Is that correct? Because that's huge too. Because you could do like a defined benefit pension plan, a profit sharing. Do you want to talk about that? There was some change in that.
Well, it's going to, obviously that's something where we need to have people do a consult with you.
Yeah. You can't do this alone.
These people aren't taking advantage. But it's just what it's doing is, out of the act that came out at the end of 2019, it's just trying to make it easier and allow people to have a longer period of time to be able to put money in.
Yeah, the new deadline is expanded. So that was huge. So the CARES Act influenced defined benefit plans. And folks, if you want to defer more, you should look into defined benefit pension plans by giving us a call at 888-988-JOSH. If you own a small business, if you own a medium-sized business, and you want to help your workers set up a 401k, call us 888-988-JOSH. If you want to learn more about life insurance, annuities, stocks, bonds, ETFs, call us 888-988-JOSH. Don't go it alone in retirement. So as we conclude this show, man, this was a value-laden, action-packed show. What other parting thoughts do you have for our listener, my friend? Listeners. Our listener. My lone listener. Go ahead. Okay, we're wrapping up. Parting thoughts. JJ, you there?
Parting thoughts are people need to call you, Josh. I mean, you are putting out good value. The way to act on this is to do what you're offering. This is what I like about Josh Jelinski, everybody, is that it's his morals, it's his ethics, it's the way he approaches business. And in some ways, I will say this, and hopefully everybody hears it correctly, you don't need the new business. You don't need it. You're doing it because you love what you do and you value the client. And then subscribe. Even if you're listening on the radio, go subscribe to Josh Jelinski. You're able to get this anytime you want on the YouTube for Josh Jelinski.
Thank you, my friend. And subscribe to JJ the CPA on YouTube, youtube.com. Just search for JJ the CPA and call us 888-988-JOSH for the free book.
The preceding program was sponsored by the Jelinski Advisory Group. Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Investment advisory services offered through Wealth Quarterback LLC.
WOR and WAXQ HD2 New York.
Unprecedented coverage for these unprecedented times. You can depend on us. We are the voice of New York. 710